25 years ago, CNBC-TV18 set out to be a part of India's story. Your story. For a quarter of a century, we've stood together by your side. Through every peak and every fall.
We see CNBC, the TV, and there's great content in it and great viewership.
Navigating the tides with you and becoming your trusted partner and investment ally.
I must say I don't watch business channels, but if I do watch, I watch CNBC.
Turning your dreams into legacies.
And my memories go back to you being a single room studio, to being such a huge facility, and I think from having a few thousand viewers to maybe having millions of viewers.
As we celebrate 25 years of shaping India's economic story, we reimagine the future of India's economy, a future we will continue to build together. 25 years of CNBC TV18. Let's begin the next chapter together.
Well, happy 25 years CNBC TV18. Happy 25 years to my co-anchors, to all the other anchors who are, of course, with us, and of course, most importantly to you, the viewer, who's been steadfastly with us all through this last 2.5 decades of sort of business news. I think it's you who make all of us do what we do, wake up every morning, one step ahead of the other, and sort of keep going and reporting. And of course, doing everything we do, the entire team here, over the last 2.5 decades. I've not personally been here that long. Many have. Our managing editor, Shireen, certainly has been. And I think Nigel and Surabhi, good morning.
Good morning.
You guys have been here.
Good morning. Yeah, this is quite a thought. 25 years is a long, long journey, right? And many of us have been here for a large number of those 25 years for sure. And I think the journey is personal. The journey is professional. The journeys of the country and the economy, we've seen so much change, reporting on these markets, talking about how that equity revolution needs to start and all, from a country that didn't know anything about it. I remember I was from Delhi. Share Bazaar was the term used to be sort of seen and looked at very differently from where we are today. So much has changed. And I dare say it's all changed for the better.
Well, that's right. Thanks to the viewers, because you all make us and we're here to serve you, and everything that we do out here is in your interest as well. So it's party time, 25 years. I've been here for 14 unbeaten years, and I hope I have a couple of years more in store. But it's been a great, great journey. I remember 14 years ago, I only wanted to be part of CNBC TV18. I'm glad I've stuck on this long.
No, absolutely, Nigel. And, I'll tell you how it's like when they say, Xerox stands for photocopy, right?
Yeah.
It's a Xerox kar do.
Yeah. The brand
I'll give you an
becomes the
example.
product.
I've told this earlier as well. This is at a time when I was not with CNBC. I remember I just moved to Bombay and I was at the Phoenix Mall, which is next door.
Yeah.
And, a few people stopped me and and I was not with CNBC, and they all looked at me and they said, well, aap CNBC pe bada acha bolte hain. That's essentially, business essentially means CNBC TV18. It has meant CNBC TV18 for the last 2.5 decades. And, we strive to do this for another 2.5 more. And get you the best and most incisive analysis as far as markets are concerned. So let's kick it off with what you need to know with the markets overnight. It's one step ahead of the other. It's day on day, and things are changing. Not so much as we wrap up into the end of the year, but it's certainly an interesting time. A small dip. By the way, as I say this, Wall Street session was the exact opposite of what we had here in India. Here in India, you had this thriller movie on the Nifty playing out with all the swings and up and down. On Wall Street, it was mostly consolidation, and right to the end, there was a small dip and the market closed down. The S&P was down a little bit, 0.19. NASDAQ was down about 0.16%. The dollar index, by the way, it broke below its psychological handle of 106. Now, this is interesting. Last Friday on Editors Roundtable, I was sort of making the point on currencies, largely on currencies, and the fact that why the dollar perhaps may be a little lower, because everything which makes the dollar index is looking a little stronger. So the dollar index down about 0.6%. We're back at about 105.72. Most of the move in the dollar was driven by the Euro USD. The Euro USD popped towards 1.0585. So a little more clarity in terms of the French situation. And I think at the margin, I mean, the strength may fade in the euro, but for now there was a bit of a pop and that kind of pushed. Largely it was the reason why the dollar was a little lower. Now, we could see perhaps a little more dollar downside, especially if US jobs data later tonight is dovish. Now, that data comes around US market open. The consensus expectation for job addition is 215,000. Unemployment rate to be around 4.1%. Let's see if the number is, vastly weaker, is big time weaker compared to these expectations. I mean, I think there could be more dollar weakness. But mind you, this most likely has, will be seen as temporary because the the bigger overlay, macro overlay is Trump and everything that he wants to do, and that's dollar bullish. So even as maybe, we'll see what happens, but USD strength into the first quarter 2025 is the larger expectation. Now, 10-year yield, nothing. Brent oil prices were largely unchanged. We get to the RBI decision here at 10 a.m. as well, and you'll hear a lot of commentary around this as we go along. Is it possible that without any change in rates, RBI sounds dovish? I think it's possible. So I think today and the commentary from the governor and all of that, I think, assumes so much more importance than just what, of course, is done in terms of rates. The CRR rate cut expectation is very much there in the market and perhaps in the price as well now with what has happened yesterday. Nifty, just to tie in the levels, it crossed 24,770 yesterday, but it did not end above it. It sort of closed under it. So that is the first level to take out, but that is 70 points away, 60 points away. The bigger resistance comes in at about 24,993 and then 25,125. 25,125 is the final frontier. That is a 61.8% retracement of the full fall from the highs of September. Nifty Bank is marched above the 78.6% retracement yesterday of the full fall from the September highs for that index. And as I said day before yesterday as well, if momentum sustains, I think you're looking at all-time highs. It's 1.5% away, 54,467 on the Nifty Bank out there. Now, supports for both the Nifty and the Bank Nifty come in at the 40-hourly exponential moving average. In the case of Nifty Bank, that's at 52,690. GIFT Nifty will give you an indication of how we're likely to start. RBI at 10 o'clock. So I think the real move in the market, one way or the other, I think we'll see post that. Surabhi.
Oh, absolutely, which is why I'm saying, the title of my sort of little chat points today was, will the RBI oblige? I think that's the single most important cue to track today. But of course, we have to get you the global picture as well. So the single most important global cue, obviously, is this non-farm payrolls report. The number, just for reference, the wider consensus is that the print today should talk about an addition of 214,000, roughly 214 to 215,000 jobs being added in the US economy in the month of November, which is obviously much, much better than the previous number, which was impacted by hurricanes. The October number was just 12,000 jobs which were added, right? So let's see if there's any revision in the October number as well. So that's the big global watch point. OPEC has decided they don't want to raise output right now. They've pushed that decision for another 3 months. So oil prices are fairly range bound. The Bitcoin headline that we were talking about, so it didn't really last for too long above that 100,000 mark. It kind of slipped below that, but there's a lot of momentum in the Bitcoin, in the crypto markets, in the Bitcoin market. And it's been constantly attracting a lot of money as well. In the year 2024, Bitcoin's up 130%. And since Trump came into power, the Bitcoin and the crypto complex largely has rallied over 40%. So let's see if this is a trend that continues into 2025. Chances are it probably will. Okay, now let's talk about the positioning over here, the picture over here. Yesterday, remember, we had a lot of perspective with F&O experts as well, and a lot of market participants are attributing that extreme volatility, sharp falls and big rises to the fact that now we have limited expiry products, just the sensex and the nifty. So you attribute it to that. But the fact is that the money flows are looking extremely strong, despite all the block trades that are happening. The net figure is massive. It's a good figure to look at, 8,500 crores. And the domestic institutions, mutual funds, insurance, they were all on the sell side yesterday, sold off equity worth about 2,300 crores. Now, on the RBI, I just want to reiterate the CNBC-TV18 poll, right? There has been a big clamor for a CRR rate cut. Our poll says that, there is a 50% probability or 50% chances of getting either a 25 basis points or all the way up to a 50 basis point CRR cut. Remember, yesterday you heard a Nomura, analyst say that maybe we'll get a 50 basis point CRR cut and a 25 basis points repo cut. So that might be on the extreme side. But yes, the market is hoping that the RBI will oblige with at least a CRR cut, and it immediately impacts liquidity in the system, which is why we've had a great week for banks as well. PSU banks, private sector banking names have all rallied on anticipation of more liquidity being injected in the market. So let's see how that plays out. In terms of stock action, lots of stocks in news today. I've just focused on one because it's symptomatic of the broader issues, the broader malaise that's there in the system. And this is the biggest worry point. Will the MFI stress start leading into any kind of casualties or accidents? Now, look at what ICRA is saying on Spandana Spurti. They are obviously noting that there is deterioration in asset quality, that there is MFI stress. But the issue here is the company has breached 823 crores of some of its bonds and term loans. This is when it starts getting a little scary. Is the stress spilling over to that extent that you're not able to fulfill your debt obligations? They're saying there is an early redemption request from some of the debenture holders as well. This is just a little under 200 odd crores worth of NCDs where debenture holders saying we want your money, we want our money. And let's see how Spandana reacts to this, how it kind of sorts out some of these issues. It's going to be an important watch point, not just for this stock, but for a lot of other microfinance players that have been anyway under stress in the market. So let's watch for this. And last but not the least, it's Friday. Hey, so let's talk about good things. Pushpa 2 is making the mark. We'll watch out for PVR. And Nigel, I'll tell you this. I was taking a cab ride to the office this morning. The cabbie says, Madam, 3 baje show dekh karke aaya. 1100 rupees ka ek ticket tha, lekin main aur mera friends gaya. And apparently, Gaiety Galaxy, which people who are familiar with Bombay and Bandra will know, it has 7 screens, all 7 running on Pushpa. So they had to run going somewhere else to get tickets there. But that's the common man willing to shell out 1,100 rupees for a ticket on this movie.
Well, wishing the team all the best with regard to that particular release. But let's focus on the markets. The momentum is clearly with the bulls, right? We saw that in yesterday's trading session as well. We had a dip towards the end of the trading session and that got bought into. So it could be expiry related, but the momentum is with the bulls. However, irrespective of what the RBI does, maybe some mild profit taking could be par for the course, part profit taking. Mind you, the trend is up, but maybe in the near term, some kind of profit booking cannot be ruled out. Now, in yesterday's trade, we had the options expiry that played out, and there was a short covering bounce that played out. The Nifty as well as the Nifty Bank, both of them, the open interest was lower, while both those two indices ended higher in trade. And just take a look at the FI positioning. Well, the short positioning from around 70-75%, that's come down to around 56%. And a bar graph will tell you the picture out there. Just in a matter of few sessions from the start of the series, which is exactly a week or so ago, those short positions have halved. From more than 1 lakh contracts, it's come down to 45,000 contracts, which is the lowest net short positions we have seen all the way since the first week of October. So that's the kind of short covering bounce, and that's the power of short covering. Moving to the client side, they have got it right. We have mentioned this even at the start of the series, which was last Friday, that the clients have been getting it right. For November, it was a bit of an off month because the index ended down by close to 100%. However, in this rise that we've seen, they are booking some part profits. So their long positions, in fact, is sub that 1 lakh contracts for the first time all the way since the first week of October as well. Moving to the options data, 24,700 call, 24,700 put, both of them were fairly active. Which brings us to the levels then. The reference point you're looking at out the downside is around 24,500 mark because that was a bit of a resistance, the mark when the markets are moving up. So that becomes a reference point down. 24,000 crucial because that's a 20 DMA. And yesterday's high, you want to get past that for a fresh breakout on the upside. So that's a bit of a resistance zone out there. Moving to the stocks in focus, RBL Bank, it had very, very bad news at the start of this week. And from there, the stock has rallied close to 15%. And it's come out of the F&O ban. So I think keep an eye out on this stock. Reference point was around 145, 150 rupees. If you can hold on to that levels, let's see whether there's more in store. But it comes out of the F&O ban, so keep an eye on that.
All right. Well, lots to track, lots of stocks to track as well. But let's get to the big story. Lata is here with what to expect from the RBI at 10 o'clock with the editor's take. Lata, good morning.
Good morning. Yes, very, very crucial policy coming at a time when things are uncomfortable for the Reserve Bank. Growth lower than expected. Inflation higher than expected. Not a very happy situation for any central banker. Well, I'll give you the order of expectation. The most likely, according to people, and I would think my vote also would be a CRR cut. The next would be very, very dovish stock. And I think you will get 1 and 2 per what I'm thinking. If you wanted to be even more dovish, the governor can actually go and change the stance itself from, you'd already gone from withdrawal of accommodation to neutral. He can go right now to accommodative. That would be really signaling an easy stance. And the last would be a repo rate cut. Now, my sense is the repo rate cut really vanishes in terms of importance because now even the rupee has steadied. I think the worst is over. So possibly, they will stick with just a CRR cut. But let me tell you, both extreme views are also there in the market. One, neither CRR nor repo, and the other, both CRR and repo. Both views are there in the market. My sense is the most likely is a CRR cut and very dovish talk. The important thing to watch now is also expectations of what is the RBI forecast, because it got so wrong, they have to change all their forecasts. Growth will be most watched. I think they may have to swallow the bitter pill and say 6.5. But who knows? They might still make it slightly higher, probably 6.7. But they can't hold on to 7. That's like well nigh impossible now. It has to be 6.5 to maybe a very encouraging 6.7. And finally, the inflation forecast, that has to be raised to 4.7 or 4.8 because the last two numbers were so much higher. And therefore, they may placate by giving a cut in the CPI FY26 forecast, which justifies a cut in the days to come. Because 4 quarters down the line, we are expecting lower inflation, so we will start cutting next time. They may lay the foundations for that.
Lata, we'd also, thanks very much for that. As always, very comprehensive. 25 policies for you, Lata? We're celebrating 25 years at CNBC.
125 policies.
Because there's so many in a year, right?
No, I mean, I'm saying 25 annual how many?
Yeah, for me it's
25 years with the RBI.
23 years.
I mean,
No, RBI is 30 years. Okay. I mean, I was covering it in Dow Jones
Even
News.
earlier,
Yeah, covering RBI for a long time. But yeah, the policies are like 5 or 6 a year, so it obviously becomes a lot more.
So it's only befitting that, today after many, I think, months, the RBI policies become so important. So it's only befitting that on our 25th birthday, RBI is going back to, Lata is going back to covering RBI in the manner in which she loves.
I agree with you. It's fitting for us that on our birthday and our very important birthday, the Reserve Bank has chosen to have its policy day.
It
could well have done December 5th. They did December 6th. God is with us.
I was saying, CNBC is synonymous with business, and I think Lata is synonymous with RBI. So, I mean, there's absolutely no doubt about it. I think, Lata, thank you very much for that. But we got the market to track and some calls.
Yes, we do. So let's kickstart the show with the equity call of the morning now and tell you more about what's lined up. Ridham Desai of Morgan Stanley says that with strong earnings, macro stability and domestic flows, it is hard to argue against India's investment case. That said, he adds potential global growth risks plus a bunching up of IPOs and near-term growth concerns presents challenges. He says most risks to their views come from outside India. Ridham adds 2025 is likely to be a stock pickers market and they're overweight on financials, consumer discretionary, industrials and technology. They're underweight on other sectors.
Okay, all right. I think there were some, views which are coming in.
Just looking at the, as we, talk to our next guest on the show, and we will be obviously turning full throttle to the RBI. Just a quick check back on Asian markets. And there's an interesting divergence there as well. I just want to point out here that some of them, like the Japanese market, are down. The Hong Kong and the mainland China markets are up. Singapore is in between. So we're not getting a very clear, decisive, directional view from global markets. That's the limited point. I think, therefore, it's not so much the globe. Today, it's all going to be about what the Reserve Bank has to say, not just what it's going to do today, but also its projections. What will it say on the growth number itself? To what extent will it, acknowledge the weakness? In fact, let's take that to our next guest. Sonal Desai, Executive Vice President and Chief Investment Officer at Franklin Templeton Fixed Income, is with us now. Sonal, great to have you on. We were just discussing how this is such an important RBI policy. All of them are important, but this one is absolutely critical, right? So let's get to the growth question first off. How do you think they'll acknowledge it in the forecast numbers? And what are we getting today? CRR cut, repo, both, neither? What?
So we think actually, essentially what we'll get is some liquidity measures. So potentially a CRR cut. But on the other hand, if I look at the growth number, our view is that the previous number, the weak number, was more of an aberration. Yes, we are coming back towards not those supercharged growth numbers which were so exciting. Probably we are looking at between 6 and 7% for India, 6.5 or so. Perhaps that will be disappointing, but it's still very, very, very solid growth. So I would say acknowledging that. But I would be surprised if there was too much emphasis given to this one data point.
Absolutely. Sonal, good morning, and thanks very much for seeing you here in the studios. You track global macros, you track the US, and I think that's the big overlay for 2025 for emerging markets as well. What is your sense? Are we seeing a much stronger dollar headed into 2025? I mean, I was just looking at, for example, from a EM perspective, RBI policy today compared to the last MPC. Dollar is higher, US yields are higher. It's a very adversarial kind of overseas backdrop that you have, in which EMs have to decide their policy. So just wanted your thoughts.
So, I think that if I look at what is going to happen to the dollar, yes, there is no doubt that, all this discussion about tariffs, that's going to be dollar positive, dollar strength positive. The fact that actually growth is looking quite robust in the US, that's also dollar positive. Against that, there is the fact that we probably are going to get larger fiscal deficits, which is actually dollar negative. So, overall, which direction it comes out in is less clear. But I would say for emerging markets, individual emerging markets which get hit by tariffs, absolutely the dollar is going to strengthen against them.
You don't think there's any chance that Elon Musk is going to be allowed to cut $2.5 trillion in spending?
There aren't $2.5 trillion to cut, in the sense that you have so much of the budget, which is mandated spending. The amount that is left over after you take out mandated spending for social security, all of the rest, defense spending, you remove that, interest spending, you remove that. What you've got left is rather small, and that covers everything from airports to everything. Getting $2.5 trillion out of that might be a stretch.
If anyone can do it, he can do it.
I think so. I agree with you. So, more power to him.
Well, Sonal, good to see you in the studio, and thanks a lot for coming down.
Yeah.
Well, tell us, what about the Fed? I think a 25 bips is almost a done deal for this December policy. Do you think so? Do you have a doubt on that? And what about 2025? How many rate cuts are you penciling in from the Fed?
So, actually for the Fed, it's very interesting because I think it's almost like a mirror image for us as to what we're seeing right now from the RBI. We're on the fence as to whether or not they will cut. Similarly for the Fed, actually, I don't think that December 25 is a done deal.
Interesting.
I think mainly because for a long time, even prior to the elections and so on, my call for the Fed was significantly fewer rate cuts than the market was anticipating, say, at the start of the year or even towards the end of last year. I never thought that the Fed really had within its power more than 125, 150 in all. So, they already did 50, which I thought wasn't very prudent. Not catastrophic, but not particularly prudent to go with 50 if you only had so many to do in all. And then they did another 25. So if I'm correct about where the neutral rate is, which is the Fed neutral rate, I think is around 4%. They've only got around 75 more basis points to do. It would be smart to skip them.
And I think that's what he started priming the market for. I mean, in the commentary earlier this week, saying that, we don't really have to rush. We're in no rush to find that neutral.
So no cut in December and 75 bips in 2025.
Yes, 75 bips in 2025. And actually the pacing of that, I think, is going to be somewhat determined by what we actually get out of that fiscal deficit, naturally. If I look forward into 2025, Trump said many things over the course of the campaign. It is implausible for him to actually enact all of that. The Republicans are quite an unruly group. So getting them all to agree to everything is going to be quite difficult.
History does tell us that he tries to do what he said he will do.
Yes,
right?
yes.
That's certainly, and of course he's got the Senate, the House, and everything. The courts. So he may try to do things he's not tried to do, and he's, of course, wiser as well after his first experience.
So if I unpack that a little bit, I would say, does he have the House? He has liberally taken from the Democratic congressman to populate his...
They may not support...
Well, no, and so for the first 3 months, actually, Johnson, the head of the Speaker of the House, he has maybe a 2% majority. And I said, like I said, Republicans are fairly unruly. The Democrats were very disciplined. You know, they would all vote together.
Yeah.
The Republicans in both the House and the Senate actually are a bit more unruly. So I mean that mainly because if I look at the different estimates prior to the elections of the costing of some of his programs, conservatively $7.5 trillion. Other numbers were as high as $15.5 trillion. And I don't think that's very popular with Republicans.
And the thing is, I think there are a lot of moving parts right now in the US, in the global economy. There's too much unknown and too much that hinges on, now what will that tariff action be? We don't know till it happens, right? And then the repercussions, etc. So just coming back to India, we discussed this briefly. You're saying that this whole slowdown is not maybe too bad. 6 to 7% is still good. But the thing is, it's still hitting markets, corporate earnings slowing down. Obviously, first half CapEx has not been that great over here. What's your, larger call in terms of India, and also how investors are looking at India on the fixed income side? I mean, we are now part of many of the global bond indices. So do you see a huge rush of capital coming through?
Okay. So again, if we take different pieces of it, so one, from the outside looking in, India actually, again, the markets change day to day to day, right? But if I look at the job that the regulators, the RBI, and the government has done on the fiscal, it is actually outstanding. I would go that far. I mean, in the last 3-4 years, we've had the fiscal deficit being cut in half, essentially, from well over 9% to probably 4.9%. This is actually a remarkable fiscal adjustment under any scenario, and it has certainly assisted also in the bringing down of inflation. So, so the RBI has had an assist coming from fiscal. If I look at the US, it's the opposite. The Fed has had a massive reduction in its ability to conduct monetary policy because of the fiscal expansion that we've seen over there. So that's one piece of it. The other thing about that massive rush of investors in or out, there I would have a more nuanced view, because here's the thing, you've got to look at the return that a foreign investor will get after hedging costs, and after you look at where US 10 years are going. And if I'm correct, and US 10 years are actually headed for 4.5, 5, post-hedging, you are not going to get a real rate of return, which perhaps is as attractive. So yes, you're going to get capital coming in as India gets included more and more into more and more indices. But over and above that, a massive inflow is perhaps...
So the reason I ask that, and it's important to have that reality check, because it's all relative, right? You take a call on an investment in one market relative to what you're getting elsewhere.
Exactly.
And the US has been looking pretty good. So if you're not getting that rush of dollars in the rupee, and we've seen the weakness already. And does that become a further concern for investors looking into India? Because we've had a weakening currency for a while now.
Yeah, I think it's more than a concern. It is a factor. It is a factor which further will reduce your post-hedging return on the rupee. And if you do see this greater return coming from other markets, this is a factor. I think it will also be, to some extent, a factor in what the RBI does. Right, because they have to look at that.
I think there's a greater tolerance for a depreciating rupee, right?
Yes,
because it's not, the yuan is depreciating, so you're kind of tied to the hip.
You're tied to the hips. Currency wars, if you call them currency wars, but ultimately, if I even look within the G3, if I look at the Eurozone, I look at Japan, and you look at what's happening to currencies, if you'd asked me 6 months ago, I would have said as soon as the BOJ starts raising rates, we will see the yen appreciate from its hugely undervalued levels. And instead, where we started, the combination of tariffs and growth, fewer Fed cuts, suddenly
the
calculus...
ever hike, or you think?
Oh, yes.
They will hike in December?
No, I think that they probably hike 3 more... They hike another 100 basis points next year, in the cycle. Yes. So we are expecting that.
Okay,
Great having you with us.
Thank you so much.
Thanks a lot, Sonal, for coming down. We have a request that you come down more often.
Okay, I'd love to be here. Thank you all so much.
We look forward to more chats. Thanks a lot. Well, for the time being, though, we'll slip into that short break. On the other side, we go full tilt on stocks. A lot of stocks for us to track. We'll get to that in just a bit in our special Top 10 segment. But let's run you through the list for now. We're looking at Canara Bank, Edelweiss Financial Services, RITES, Seagull India, we have Ramco Systems, Torrent Power, and Zaggle. All of them will be reacting to positive news flow, while Spandana Spurti, Nykaa, and Angel One will be reacting to negative news flow as well. Stay with us. We get into further detail on the other side of the snappy break.
India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Welcome back. You're with us on Bazaar Morning Call, and we're coming to you from the CNBC-TV18 Motilal Oswal studios. Well, lots and lots of stocks to track today, and our team is standing by with the CNBC-TV18 list of top stocks to watch. So let's straight away get to the action. Abhishek has his hands full. He's looking at Spandana Spurti. Like I mentioned, there are lots of concerns there with the rating agencies, but there's also Canara Bank and Edelweiss Financial. Abhishek.
Well, to begin with Canara Bank, value unlocking potential is seen now. RBI has approved a divestment of around 13% stake in their Canara Robeco asset management company via IPO, as well as 14.5% dilution of their stake in Canara HSBC life insurance company via IPO. Now, Spandana Spurti, after Fusion Finance, is the second MFI lender to come under radar of rating agencies. ICRA has revised its outlook to negative from stable. The credit rating has been maintained at ICRA A+ negative. However, they say that the key reason for this is that the company has breached repayments of its bonds as well as term loans amounting to 823 crore, and there are early redemption requests for its NCDs worth about 196 crore. So they say that there are headwinds for asset quality which would continue in the near term given the over leverage of borrowers that is there in the system for Spandana Spurti. Now, Edelweiss Fin over there, the alternate asset subsidiary, has filed DRHP for OFS, that is offer for sale, of about 1500 crore via IPO. Now, this company could be India's first initial public offering in the private capitals segment. It is owned by Edelweiss Securities and Investment Limited. As of September 24, CRISIL had a rating of A+, watch negative, rating watch with negative implications that is on the company, because CRISIL says that the rating has been placed on negative watch following material supervisory concerns that was raised by RBI on 29th of May 2024. Back to you.
Okay, all right. Thanks a lot for that, Abhishek. Well, let's hop across to Vinny. She's got a whole host of stocks that she's tracking. Vinny, morning, over to you.
Good morning. A couple of stocks that I'm going to start with. First one is Nykaa. We're expecting a bit of a subdued move today for Nykaa after Nykaa Fashion CEO Mihir Parekh has resigned with immediate effect. Do not forget, Mihir had joined the company in 2015, so he's joined as a chief strategist officer that time, and he's spent a lot of time in terms of contribution coming in on a Nykaa strategy and fashion front as well. So important and significant resignation coming in there. Right, that's the next one we're talking about. They've secured an order of around 148 crore rupees, and this one is from IIM Raipur for their phase 2 campus. This involves execution, supervision, monitoring, as well as overall development of the campus. This is a cost plus basis contract that they've received. Keep an eye out on rights. We're expecting a positive move. Project is expected to be completed in 23 months. Seagull, that's the next stock that one should be keeping an eye out on. They've received an arbitration award. There was a case which was going on against Greater Mohali Area and Development Authority. So now they've been awarded 55 crores, so they will be receiving that. Positive impact on the financials is the highlight coming in, so keep an eye out. Green expected here. So Ramco Cements is the last one. They've entered into a partnership with Hanjin Infosystems, which is a Korean company, and this is for to drive digital transformation. So keep an eye out on these stocks today.
All right, Vinny, thank you very much for that. Well, let's talk about a few other names. There's Torrent Power, Ola Electric, and Zaggle Prepaid. Sudarshan has got details. So, morning.
Morning, Prashant. So I have Torrent Power, Angel One instead of Ola Electric and Zaggle Prepaid. So Torrent Power, it has closed QIP of rupees 3,500 crore, and it has issued more than 2 crore shares at a price of rupees 1,503 per share, and 50% of those shares have been issued to one mutual fund, that is SBI Mutual Fund. And other shares have been issued to Kotak Mutual Fund, New World Fund and Nippon Life. Angel One, it has released the update for the month of November, and updates are looking a little subdued. While client base is increased, number of orders and gross client acquisitions have come down month on month. Client base is up 2% month on month, while number of orders have come down by 23.5%, and gross client acquisition has slipped 15% month on month, and it's for the second straight month that client acquisition has fallen. Last one is Zaggle Prepaid. It has announced 3 orders in last 2 days. And yesterday, the 2 orders are: first, it has signed 2-year agreement with Blink Commerce for its Zoyer solutions. And second is, it has signed 1-year pact with Hitachi India for Zaggle Propel Reward solution. So green for Torrent Power and Zaggle, and red for Angel One.
Okay, all right. Got that, Sudarshan. Thanks very much. So let's quickly recap our list of stocks to watch. The ones that have positive news flow around them are Canara Bank, Edelweiss Financial Services, RITES, Segal India, Ramco Systems, Torrent Power, and Zaggle Prepaid. Stocks that have negative news flow around them are Spandana Spurti, Nykaa, and Angel One. Okay, so that's the stock list for the morning. Let's now move to commodities. We have Manisha joining in. Manisha, happy 25th to you as well. And then let's also talk about the cues this morning.
Well, happy 25 to you as well. Well, you know, when you look at the commodity markets in Asia right now, it isn't doing so well, and that is because there is strength in dollar. The U.S. Treasury yields also are on the stronger side, and that's weighing onto the markets. I'll start with crude oil prices and the OPEC and allies meeting yesterday. On expected lines, decided to maintain current oil production levels for the first quarter of 2025. So the increase in production will now come in from the second quarter of 2025 and will continue for 18 months. Well, the OPEC and allies currently are withholding 5.8 million barrels per day. So that's the kind of spare capacity the world is dealing with. The market did see some support because the U.S. crude inventories fell by 5 million. But then the U.S. production for crude is at record highs. So that is continuing to put pressure on prices. We are back around $68 per barrel for the WTI crude prices. The pressure also is coming in for the metal prices. So whether it is about industrial metals, precious metals, all of that saw a decline because there was a slight increase in U.S. weekly jobless claims. For today, it's going to be about the U.S. non-farm payroll data. The markets are anticipating 200,000 jobs addition in November. If that number moves either side, then you will see a reaction.
All right, that's a big one. Thank you very much for that, Manisha. We'll take a quick commercial break here. We come back and connect with the management of Maruti Suzuki as we discuss their November auto sales numbers and the outlook going forward. Stay tuned.
Welcome back. Well, let's get started with our management calls. And Maruti is the first management on the show. The company's November sales came in line, aided by the SUV segment. Joining us now to talk about the outlook, we have with us Partho Banerjee, Senior Executive Director, Marketing and Sales at Maruti Suzuki India. Mr. Banerjee, great to have you on. Thank you very much for joining us. So let's talk about the demand sentiment on ground. And, you know, the festive season was, I think, okay for most OEMs. But how are things looking now?
I think the last month was pretty good for us. We saw a very good traction in terms of booking. In fact, I would say the festival season impact is still on. We are seeing a very good sort of interaction and response from the rural market. Rural market has been doing pretty well. We are seeing it is increasing to the tune of 2.7%. Now our penetration of rural market is 48%. In terms of numbers, if you talk about it, we had a dispatch growth of almost 5%. And if we see the numbers for the retail, October plus November, because this year Diwali was in the month of October, last year it was in the month of November. So if we take both this month cumulatively together, October plus November, our Vahan market share growth, retail growth is 10.8%.
Hi, Mr. Banerjee. Thanks a lot for joining in. Well, considering the continued growth post the festive season, do you still maintain the retail sales outlook of around 3 to 4% growth for the year? Or are you expecting to do better than that now?
If we see the retail growth for this year in the industry from April to November, it's around 4%. So I think the beginning of the year, Siam did a projection that the industry will grow at the rate of 3 to 4% since the base was very high. So I think industry is going absolutely as per the forecast which was made in the beginning of the year. And I feel the year will be ending at around 3 to 4% only.
Right. You know, we've seen an increased level of discounting during the festive season. And again, we are entering this period, which is the end of the year. Discounts usually go up. Demand is yet to recover fully. Do you see an increased trend in, manufacturers reaching towards discounts as a strategy to push sales?
You rightly said. I think everybody waits for the month of December. There is generally a tendency for the consumer to wait till the month of December to buy the car. So it's too early, just the beginning of the month. But what we are seeing is this, the response is pretty positive actually from the market. So we are expecting that December will be a good retail month.
Okay, all right. So if we talk about, the sales over the last couple of months, they've been indicating continued momentum in the SUV segment. That's the part of the market that's doing really well for most automakers, right? What is your, total share of SUV as your own pie, and also in terms of market share? Where are you with respect to SUVs?
Yeah, I think today if we see the segmentation of the market based on the form, so you're right, SUV segment share has moved up from 50% to now 54.6% industry. And Maruti has moved from 24% to 27.6%. So we are also continuously improving our share in the SUV segment. However, I would like to just say one thing, that there are other form factors also and other segments also, like the hatches, premium hatches, MPVs, like Ertiga is doing very well, MPV segment. We are seeing that last month, in fact, the Baleno is the #1 selling model, the month of November. Swift in the month of October did a retail of more than 22,000 vehicles. So we are seeing that across the segments also, there are consumers who are looking forward to buy the cars. But nevertheless, right now, the share of the SUV segment is increasing actually.
All right, Mr. Banerjee, last month you announced the 4th generation Desire. Could you give us a sense about how demand for the Desire has been so far?
I think Desire we are seeing a very good response. We are having now, beginning of this month, we are having close to 25,000 bookings, pending bookings with us. And if we see how has been our booking growth, it has almost doubled actually. After the launch, we launched it on 11th of November. So earlier we used to get around 500 bookings per day. Now it is on average 1,000 bookings per day. That's the response. And another important thing which we are seeing, it's too early, but I think there's a positive sign. The top two variants booking is coming close to 50%, which earlier used to be around 21, 22%. So that's a very good sign. The features which we have introduced in those model has been very much appreciated by the consumers. So they are more and more going towards the higher variants.
Okay, all right, got that. Mr. Banerjee, we'll leave it on that note. Thank you very much for joining in. Take a quick break, come back on the other side. Siddharth Kemka of Motilal Oswal Financial Services will join in with some specific stock ideas.
Welcome back. Well, we've listed down all the top stocks for you. So let's get to some fundamental analysis to help us out with that. Sid Kemka joins in. Hi, Sid. Good morning and thanks a lot for joining in. Well, let's talk about some of the stocks that are going to be in focus today. Spandana Spurti, we have an ICRA negative view that's come out there. So the stock could be under some pressure. What's your view on the stock?
Good morning, Nigel. Good to be on the show. And all, I would like to congratulate the entire team of CNBC-TV18 on the remarkable 25 years of the dedicated commitment towards educating and empowering the Indian investors. So the focus on providing insightful market analysis, the crucial financial information has significantly contributed to the growth of the Indian financial landscape. So congratulations and best wishes for the future. So coming to Spandana Spurti, I think what we are seeing is that the overall pressure on the microfinance space continues, and that is something that is impacting not only the growth but also the asset quality. So what we believe that the elevated credit cost is leading to the losses in the company, and the management needs to implement more measures to improve the portfolio quality, stricter lending norms, as well as the enhanced recovery efforts. So with those efforts, while there could be some improvement going forward, but in the current environment where there is also some regulatory pressure in terms of the NIMs and in terms of the lending rates at which microfinance can do, plus the increasing credit costs, I would say that one needs to be definitely remain a kind of a neutral view, or you can say an underweight on the entire microfinance space right now.
All right, so stay with us. What we'll do is we'll take a quick commercial break here. There are more questions coming your way. There's 5 minutes to go for the pre-open session. More market discussion. Technical trades also coming up with our experts, Mitesh and Shrikant, this Friday morning. Stay tuned.
Welcome back. This is Open Exchange, and we are coming to you live from the CNBC-TV18 Motilal Oswal studio. Well, we're almost getting the pre-open rates that are coming in there. But for the timing, let's welcome our technical guests, Mitesh as well as Shrikant, join us on this Friday morning. Good morning, gentlemen, and thanks a lot for joining in. Well, Mitesh, you go first. Breakout rally is what we saw yesterday, and towards the end, quite a lot of volatility. But the trend is still up, I'm guessing.
That's right, Nigel. The volatility was very high, but again, I think that the market direction in the short term remains positively biased, given the fact that the hourly and the 2-hourly charts, the indicators and the averages are still pointing upwards. So in that sense, I'm not really worried about the intraday volatility, as long as the levels of 350, 360 zones are not being taken out. It's a good chance that, we should be doing pretty okay.
Okay, all right. Mitesh, stay on. Let's ask Shrikant as well what his sense is on the market. Morning, Shrikant. So, on the index, first of all, the index was giving everybody a headache yesterday. Today, are you going to trade it?
Yeah, good morning, Surbi. I think those who are following to the technicals or those who are very disciplined, I think they must have made very good money in yesterday's trading session. And today also I am of the view that in case if there is any correction in the first half because of any reason, then we should look for taking some long bets, because this is particularly a very strong pullback, and we may even see the levels of 25,000, 25,200. That's the overall view. The supports on the downside are placed at 24,500 and at 24,400. If we see any drop, I think we should look for taking some long bets. But in case after the announcement, the market breaks the levels of 24,850, then there certainly we should look for taking long bets, because in that case, I'm expecting market to even cross the level of 25,000. For the Bank Nifty, there also we are of the view that it is very close to its breakout level, but 53,500, 53,400 is something where we should look for taking some long bets. Eventually, I'm expecting Bank Nifty to move towards 54,500 or 55,000 in next few days.
Okay, that's on the indices, guys. Let's come down to stocks as well. So, Mitesh, morning. What about the stock list?
Good morning, Surbi. I have one sell call. Last 2-3 days we've been having all buy calls. Today I have something on the sell side as well. But to begin with, the first stock is a buy on LIC of India with a stop at 959 for targets of 1,010.15. KPIT Tech is a buy with a stop at 1465 for targets of 1560. Also a buy on Excite with a stop at 446 for targets of 470. And the only sell is Oil India, which is a conditional sell. The pattern is weak, but there's a support pivot at about 468, 470 zone. So sell below 468, 467. Keep a stop at 480. Look for targets of 440.
Okay. Shrikant, your stocks, what will you work with today?
Shrikant, can you go ahead and give us your picks? Okay.
Okay, I think maybe we can go back to Shrikant in a bit. But Mitesh, if you're there, I just wanted to throw 1 or 2 more questions your way. So, Bajaj Housing and Credit Access, I mean, in technicals, you look at stocks making newer highs and not stuff which is coming off lows. But these are 2 names, Bajaj Housing and Credit Access, coming off recent lows a little bit. Looking any good?
So, Bajaj Housing, yes. I think yesterday we saw a breakout and a reversal kind of a pattern on the candlestick as well as the intraday chart. So, my sense is that while the first target is around 155, 156, in a good case scenario, I would even look at 165. So from a trading point of view, there is about 7-8% at least on the upside minimum, and maybe more. And a good way to trade this would be to accumulate slowly around 144 to about 142 zones and keep a stop below 137 here.
Okay. Two more names, BSC and CDSL. Big movers from yesterday, Mitesh.
So BSC has broken out of a sideways consolidation, Prashant. if you look at the charts, for many times it had failed to close above 4,900, at least on 4 occasions I can see, starting from October. And yesterday there was a breakout. If somebody's holding, I think the target which I would look for is around 5,500. And if somebody wants to enter afresh, try to do that on a pullback. When it gives a pullback closer to about 5,000, 5,050 odd zones. And CDSL also, I think the trend has been there for quite some time. So not the best entry point right now, though the upside still looks, likely to happen in the next few days. But and it's met all the targets which we had on the upside. But I think, there's no sign of weakness, but not a good entry point right now from the risk reward equation point.
Mitesh, what about something like a Castrol? Did very well in the last run-up, corrected quite a bit in the fall from the highs of September. It's starting to make a nice comeback. This week has been good for Castrol.
So, Prashant, yesterday we saw some first signals of reversal happening on the charts of Castrol as well. And my sense is that the stock might do well in the next few days. And, let's see how it goes from there. But for the time being, I think, the way to trade this would be to slowly accumulate it and keep a stop below levels of 212. And the first target I'm looking at is 231 and then in a good chance 245 as well.
All right. Let's go across to Srikanth now. I think the audio is fixed. Srikanth, you were telling us your trades.
Yeah, Prashant. I think, all these power finance companies, they are showing good amount of strength, and there we are expecting further more activity. In that, we like REC, we like PFC, but specifically Power Finance Corporation is showing some strength based on its technical formation. It is around 512. I am expecting stock to move towards 530, 535. We can keep stop loss around 499 for the same. And the other stock which we like is Tata Steel. Most of these metal companies recovered on Thursday and close above their previous closings. So I'm expecting Tata Steel to do well in the near term. I'm expecting stock to move towards 160 and we can keep stop loss at 143 for the same.
Okay, all right. Got that, gentlemen. Thanks very much for all the trades and all the calls. We'll come back to you in just a bit. Siddharth Khemka is still with us. Siddharth, hi. Good to have you on the show. I want to draw your attention back to the MFI space. And look at what now some of the rating agencies are saying on Spandana Spurti. They are talking about not just the stress and the fact that asset quality is deteriorating, but the problem is that for this one company, it seems that they're delaying or defaulting on some of their debt covenants, on some of the bonds, and the NCD holders are asking for early redemptions as well. So there's a domino effect problem, and that threat still lingers. Is there anything that you're willing to take a contrarian view on in this space, maybe a Credit Access or anyone's stock, if you feel that this will all improve by, say, the fourth quarter, which is what a lot of companies are claiming?
Yeah, I think if you look at the entire space, has been under pressure, and everybody now knows that, and stock prices have also corrected. So there are multiple hurdles, not only from the credit cost, also from the regulatory perspective of lowering the lending rates, which could also impact the overall profitability apart from the increasing delinquencies and the pressure from the borrowers. So what we believe is that among the lot, what we could, if at all, we could take a contra bet. We could take a contra bet on Credit Access. Which had even in Q2 reported a strong operational performance. NI was up 22%. We had seen the pre-operating profit also grew about 19%, while the PAT definitely declined due to the increased credit cost as well as delinquencies. The overall AUM growth of 12% reflected robust demand, especially for the company Credit Access. And we believe that recovery by the end of Q4 should be visible, at least for some of the players, and where Credit Access is kind of a market leader. So currently we are focusing in 18% AUM CAGR, and we have a buy rating on Credit Access.
Okay, so you do have a buy rating on Credit Access. Got that, Siddharth. Anything else? We're winding down to the year. Anything else? An interesting stock idea from you?
Yeah, sure. So if you look at Polycab, something that we recently started liking, the companies, if you see the entire wires and cables companies had been reporting weak numbers due to the rising cost prices and unable to pass on the price hikes. So what we understand is that some of the companies have started taking price hikes with the improvement in demand and with the raw material, especially the copper prices stabilizing. We expect Q3, Q4 to be much better than the first half. We are also seeing strong demand from the power transmission and distribution, growth in the private capex as well as the real estate space. The company is also expanding its Gujarat EHV plant by the end of FY26, which would give it a good push into the overall transmission space. So what we said again, things were not looking that good, but I think from here on with the price hikes, the raw material cost stabilizing, and with the expansion plans, we believe that a 15% earnings CAGR could be there. So we like Polycab with a target price of 8,340.
I think let's just put the Angel One stock up on the screen. There was some data, I think it was monthly data, which we were flashing about 20 minutes back. And I saw some down figures, 1.33% lower. Remember, last month market volumes were lower. So it should be a reflection. I mean, brokers and intermediaries should basically reflect that. The rupee is opening with a 10 paisa change, so 84.65 compared to 73 as of close yesterday. So that is essentially what is coming through on the dollar rupee, slightly better this morning. Siddharth, any thoughts? These capital market plays, intermediaries, etc.?
Yeah, sure. I think we all seen the strong momentum in the capital market space across the segment. There has been a strong momentum. BSE definitely looks good with the weekly expiries being consolidated to just 2. So we believe there will be a good market share gain in the derivative segment by BSE. So that stock continues to do well. The mutual fund inflows continues to be pretty strong. So you have the AMCs, you have CAMS, continues to do well. CDSL continues to do well. Angel is interesting while there is some concern about the market share loss due to the derivatives, number of expiries going down, the lot size going up. What we see is that strategic diversification into some of the other businesses, for example, the wealth management, the AMC business, that would provide long-term growth for the business. The current business continues to do well. We believe that after the initial hiccup of maybe 1 or 2 months, derivative volume would again go up for the entire industry, and where again Angel could do well. So we continue to like Angel. We have a buy rating and a target price of 3,600.
All right, thanks very much for that. Sid, appreciate you joining in, and we chat post-market, post the RBI policy next week as well. Have a good one. Indus Tower is what we want to focus on. Sudarshan is here. I mean, stock was in focus yesterday, came off the highs, ended 1.5% higher, but more here. So good morning.
Morning, Prashant. So Indus Towers yesterday saw block days of 3% equity, in which Vodafone PLC has sold its remaining 3% stake, and Morgan Stanley Asia, Singapore and Kotak Mutual Fund were the key buyers, and block deals happened at rupees 353.70 per share. Now today JP Morgan has come out with a note, and it's a positive note. JP Morgan has met with the management. JP Morgan has an overweight call and target is rupees 520 per share, and management says it expects Vodafone Idea to clear its entire 3,500 crore dues by Q4 of FY25 or latest by early FY26. Second is it expects tower rollouts to be higher in H2 FY21 versus H1, and 5G rural rollout is still some time away as 5G use cases are yet to pick up, and it expects 7 to 8% tower renewals. Basically, it comes every year, and bulk of that is expected by FY27. And company has no plans to repay the debt. Excess cash will be used to repay the shareholders. So positive brokerage note from JP Morgan after meeting the management as well after the block deals.
Okay, all right, got that. So Indus Towers is going to be on our radar today as well. Nifty's up 21 points in the pre-open. Sudarshan, oil and gas also on the radar. What are the stocks you're watching and why?
So today Citi has come out with a note, and it says that there's a string of event catalyst over coming months. So it starts with there might be a potential relief for city gas companies. It says GST Council may bring gas under GST, or government may lower excise duty on CNG. Second, it believes there might be sharp earnings recovery for oil marketing companies, and this recovery might be via retention of healthy marketing margins or via LPG compensation that government may announce in upcoming budget. Next is it sees progress on GAIL's tariff hike proposal that might come in next few months, and last is commissioning of Reliance solar module facility. On affecting all these things, it believes city gas companies like IGL and MGL offering compelling risk reward, saying the timeline of next 6 to 12 months. And in addition to HPCL and GAIL, Citi has opened positive catalyst watch for IOC today as well.
Okay. I was just actually looking at these stocks, IGL and MGL, in the pre-open. Right now, they're quiet. Sudarshan, thank you so much for that. I thought they're really quiet. The thing is, they're so badly beaten down that if there are any believers out there who want to go with the Citi view and feel that some of this tax change can benefit, let's see if they come in today. Right now, those stocks are flat.
All right. Well, I think just a couple of seconds to go for the market open. 5 seconds. 20 points higher, so it's a slow start, and I think that's reasonable because 10 o'clock you have the RBI decision. So maybe just treading water till then, and then you see the real move come through. 24,699, 24,700. Remember, there's been a sharp run-up yesterday and over the last couple of days. I mean, actually, all the way from the lows of last week, the markets picked up quite a bit of pace. So the start is flat. Stocks, I mean, idiosyncratically, without a broader overlay, can move, and I think that should be the focus, at least between now and 10. And of course, after that, maybe the market itself, the indices itself pick a direction. What else do we have as far as the indices are concerned? Mid-cap index is flat. Bank Nifty, maybe just a quick look. That is closest to being back at its previous all-time high, 53,600. 54,440, 450 is the last high. So that, again, is absolutely flat. Nothing on it. And we'll put out some sectors, etc. The heat map maybe gives you a quick snapshot view of how many stocks are up and down as far as the Nifty is concerned. And then we'll look at more stuff. But I think let's dive straight into stocks this morning. Surabhi.
Okay, so getting to it, right now the Nifty is down about 7 odd points. By the way, we should check on Segal. Not sure if I don't think there was a block. The stock's down 9%. There was an arbitration, but they have to, I think, an arbitration on an existing outstanding dispute. We'll go back to that story that Vinny was pointing out. Watch out for that one. Name more details on it in just a bit. But anyway, on the Nifty, Trent, Bajaj Auto, ICICI Bank. These are the early movers on the way up. There's ITC also, which is seeing some green. SBI Live, Sun Pharma, Mahindra and Mahindra. And then it's getting really quiet. No major winners. But Trent is the one defining stock, which is moving up in a very clear fashion. 2.5% up now on Trent. And Bajaj Auto is doing well as well. TCS, L&T, HDFC Bank, Infosys. These are some of the weaker names. Again, down by just about 0.5%, not too much. Very quiet after that. Reliance, HUL, absolutely sitting on the fence. There's Tata Consumer, absolutely flat. Very quiet on the Nifty. Nigel, let's focus on mid-caps. That's where the action is.
Well, that's right. Borosil Renewables. The stock had a good run yesterday. There seems to be some protection that's come in there for them, and that's why that stock is up 5.5%. Big up move is what we are seeing. Remember, the management has been rallying for some protection measures on solar glass, and that seems to have come about. So that's why that stock is up 5.5%. Yesterday as well, the stock was higher. BSC continues its good run. It's up close to around 3.5%. So good move out there. Arcade Developers, that's one of the newly listed companies. It saw a sharp correction post-listing. Then the stock has gradually started moving up. In fact, yesterday it was up 7-8%. Today it's up close to around 2.5%. One of the top volume movers. Jyoti Structures, another stock that went to around 40 rupees, came down to around 30 rupees. There's a circuit filter expansion that we're seeing out there. So that could be one of the reasons why that stock is flying away in early morning trade. Chemfab Alkalis, we don't talk about the stock very often. Volume's not very, very high. But that stock, in fact, is up close to around 13%. Axis Gates is another stock that's up close to around 8%. So a big move is what we're seeing on that one as well. And Suraj Estates, these volumes relatively higher than what we normally see. So just pointing out some of these names, big up move is what we're seeing. Ramco Systems as well, that's another stock that's moved up. Jai Bharat, that stock is down close to around 9%. So I'm not sure what's gone on there. And for the second day running, there is some mild profit taking that we're seeing on Genus Palm. So keep an eye out on that stock as well. And HEG, yesterday, a lot of block trades out there. The stock ended mildly in the green after being up more than 6% at one point of time. But HEG is the one that's now down close to around 3%. Graphite or graphite electrodes? Well, there was a bit of confusion on that one. So I think now it's seeing some profit taking.
Okay, well, so yeah, graphite was down about 5.5 yesterday, and HEG is also now following with some cuts. 13 points. It's absolutely unchanged, actually, not very much at all on the indices. BSE is the biggest volume-led gainer, like yesterday. BSE is at number pole position, another 2%. Borosil Renewables is up at number 2, second day running. I think it's moved up from levels of 440 to 540 in 3 sessions. Borosil Renewables. We, by the way, spoke with Mr. Keruka recently. We have Sagility, which is up 3.5%. It's at number 3 position in terms of volumes, big gains. Rights is up about 3.5-4%. Zentech is up 4%. There is NetWeb, which is up 3%. Some of these are newer names you don't see very often at 9:15 straight at market open. PG Electroplast has been making highs, 3% here again. Rain Industries is up about 3.5-4%. EMS Limited will come up about 3.5-4%. Westlife, that's the McDonald's franchise, 3% higher on that one as well. I mean, it's an easy 2:1 advances to decline ratio. I was talking about Angel One, before market open, and you had those flashes come through. We'll invite the management on as well. Angel One is the biggest volume-led loser. It had a bit of a pop. I think we got the monthly numbers which show a bit of a decline in terms of transactions, etc. And stocks at about 3,115 with some cuts coming through. Well, let's... sorry,
Prashant, just putting this out for clarity. The rate on Sigal India will change that rate. Don't go by this because it's some technical issue. The stock is not down 9%. It's actually up 2 to 3% because the news is positive. The arbitration award is 54 crores in the company's favor.
Yes.
So there's nothing wrong. Just ignore the rate. We'll fix it and come back. Yeah.
All right, well, so that's some clarification coming through as well. But let's move forward and let's get into an exclusive conversation now. Jonathan Garner is Chief Asia and Emerging Markets Equity Strategist at Morgan Stanley, and he's joining us on the channel now. Jonathan, good morning. It's a pleasure having you here on the program as always. Prashant this side. I want to start with growth, which seems to have hit a bit of a road bump recently, Jonathan. Nominal growth has dropped to 8%. That's what corporate profits track. What's the sense, Jonathan, and how should we read this? You've been a big bull on India, best performing market, best growth prospects, etc. But it's a bit disappointing. I mean, we're in the 5% handle now, real growth.
Yes, you're right, and we've been watching that closely. I should say we remain constructive India. We are overweight. We believe we're in a secular bull market, but we have had this cyclical slowdown. And I think the debate with investors is, when does the kind of growth pick up again? And the view that we are getting from our economics team and from Ridham Desai, our strategist, is there were some quite unique features behind the slowdown. We obviously had the election. We then had a lot of rain in August. We had some changes in the lunar calendar. And what we're now actually seeing is the early signs of a pickup. And we do think that government fiscal spending will come to the fore again. And we are optimistic that in the first half of the calendar year next year, so that is the second half of the financial year, as it were, in India, as we go through to the end of March and then the end of June, we will see a pickup. And so we are above consensus on earnings growth. Those earnings estimates have come down, but we think earnings growth moves back up again. And we have a 93,000 target for sensex for December of 2025, which means it's got more upside than pretty well anywhere else other than Japan in our coverage.
Jonathan, what does it mean for... two questions, actually. Does growth need a bit of help? You said fiscal on the government side. RBI today, by the way, and we'll hear from them as well. There'll be an acknowledgement. What they do about it, we'll have to wait and watch. Do you think we need a bit of a push now, both from the monetary and fiscal side? And is that certainly going to be possible with what's happening globally, in the US especially?
Oh, absolutely, because the US rates environment is softening. Rates are coming down. I don't think the monetary side is as important as the fiscal spending side, which will come to the fore. But on the underlying consumer and industrial investment cycle is also, we think, intact and very much in contrast with what's going on in China, which is in structural deflation. So we do think this is a sort of 2-quarter cyclical slowdown. It's not likely anything worse than that.
Okay. Jonathan, hi. Great to have you on the program. And it's good to hear that you're still keeping the faith, so you're not too perturbed about this last GDP print. But having said that, a lot of people here in India are arguing for, more stimulus, monetary stimulus for sure. CRR cuts, repo rate cuts. How important is that in your projections for the Indian equity market? What are you penciling in from the monetary side as of now?
Well, as I said in answer to the previous question, relatively little, maybe 50 basis points off rates. But these growth numbers that India is still producing are still just about the best in the world of any major economies. I mean, if you look at the US, growth is slowing. If you look at some of the markets that we're negative on, for example, Korea, that's in the news right now, we're predicting like a one handle on GDP growth in Korea next year. And the markets that are more exposed to sectors like autos and semiconductors globally, where there's a cyclical slowdown underway, they are likely more pressured and in many cases actually are starting to underperform. So I really wouldn't be too alarmed on the situation in India. It looks good to us.
That's, again, like I'm saying, from our perspective, that's really reassuring to hear. But on the US, if you could just expand on that, because the narrative of the last two to 3 weeks, actually since the 5th of November, has been this whole American exceptionalism, right? Just buy America,
yes.
Everything America. So are you saying that that's gotten a little excessive?
Well, our key overweights globally are the US itself, Japan, and India. Those three effectively. And we are most cautious on Europe, on global EM, and within EM on Korea and China. They're our biggest underweights. So India sits there as one of our top 3 preferred markets globally. It's true that the US is getting a lot of attention. And one of the themes that we talk about in the emerging space is that emerging markets as a whole doesn't really make sense as an asset class anymore. We've basically said for some time that you need to pick your individual spots. And India is one of the places that we like. There are others that we like that are going through idiosyncratic positive stories, South Africa, for example, and parts of Southeast Asia. But I think that it's not so much the case as will money move out of the US to buy EM. It's more like, can you identify really quite a unique opportunity, which we think India represents, to participate in a structural bull market? Do remember that earnings in India have been growing around about 15% per annum compound dollar over the last 3 or 4 years. Slow down right now, then hopefully that resumes. And that's way, way better than emerging markets in aggregate that's struggling to deliver any earnings growth, or China, where earnings growth are actually falling.
Hi, Jonathan. Good morning and good to see you in. This is Nigel on this side. Jonathan, the FI selling picked up big time in the last couple of months. And we are thanking our stars that, in fact, that slowed down at least in the last few days. Do you think bulk of that FI selling is done? Because the FI holding in the Indian markets has come down to the lowest we've seen in the last 10 years or so. Your take?
I think you're referring to the percentage of the market owned by FIIs rather than domestic investors. And certainly one of the reasons we're bullish India is the domestic investor bid. The young demographic getting formal sector jobs, interested in their country's future, investing in stocks. The FIIs you're referring to, that tends to be related to the legacy situation in relation to active emerging equity funds, where you're getting these redemptions. And to some extent, a short-term tactical bounce in China around about the middle of September, around about the time that this growth slowdown in India also became visible. However, that tactical bounce in China, in our view, is fading and likely to fade quite badly as the structurally adverse growth drivers reassert themselves. Meanwhile, with the IPO, the secondary issuance, and the underlying outperformance we think of India, its weight in EM is rising, but it's also, for the first time ever, coming on the radar screens of truly global investors. If you look at the ACWI EMI index or broad equity indices, it's up to about 2%. And at that level, truly global investors start to make trips to India. They start to look at the first 1 or 2 stocks that they can add to a global portfolio. And that's where the future lies. To some extent, it's what happened a decade ago for China when the major China internet names found their way into global portfolios. That's now reversing, but that story lies ahead for India.
Jonathan, you made the growth comparison here vis-a-vis some of the other emerging markets. The sobering thought, though, is that we're a $3 trillion economy, and growth is now coming in the 5% handle. China is almost 19 trillion, and last year growth was 5%. So actually, I mean, from an India perspective, we've got no business slowing down, right? I mean, like this, to drop to, we must do all we can to sustain high rates of growth for a long period of time, because I guess that's what a lot of this thesis is dependent on, higher consumption and a bigger consuming class.
Yeah, so those numbers you just quoted are, I guess you're thinking about real GDP growth numbers on official estimates, okay? If you actually look at what's really going on in terms of nominal growth, even on official estimates, Indian nominal GDP growth is 2.5 times that of China, still is, because you've got the real growth plus the inflation. And if you look at what's actually going on the ground, what multinationals are telling you about their businesses and what corporate earnings is actually compounding at, as I said, Indian corporate earnings are compounding easily in double digits at the moment in dollars, and Chinese corporate earnings are struggling to grow at all. So it is not the case, frankly speaking, that India's economy is growing at the same pace of China's. That's not what's happening in reality at all.
There is the inflation component, no point taken. Jonathan, just to take that point forward with regards to China, as we head into 25, I mean, of course, 20th is inauguration in the US, but already, I mean, they've started moving on various things and giving out indications, the Trump administration, what they want to do. Do you think, the policies towards China will be as adversarial, which benefits this China +1, and India has been a beneficiary of that over the last couple of years? Or maybe this is a bit of a reset with Musk at Mr. Trump's side. Maybe, it need not be. It's a reset, and maybe in a slightly incrementally positive way. What's your sense? That's not consensus, though. Go on.
Yeah, I think this is administration that is likely to materially increase tariffs and non-tariff barriers on China. We're anticipating over 18 months the effective tariff on China from the US goes from about 12% to 36%. And that will add to China's growth difficulties and probably also pressure the currency lower as China responds to that. And indeed, one of the long-run themes when we go back to this dollar earnings growth that I've been emphasizing is the Indian rupee is now more stable than the Chinese renminbi. There's a role reversal there. And India is very unlikely to suffer the same kind of trade pressure for all sorts of reasons as China will from the incoming administration. So that is an important headwind, and it's part of our thinking. And it's why our China economist actually expects China growth to weaken even further next year. Whereas I just said for India, we expect a cyclical pickup to resume.
Which also brings me to the next question in terms of what to play in the India market, Jonathan, and what you like. A lot of people will want to believe that China's loss will probably be India's gain, because we saw that play out at least in COVID, right? COVID, when there was supply chain disruption, a lot of the Indian API manufacturers, those who are making these bulk drugs, chemicals, those companies started doing really well here in India. But that was a different time. Now we're talking tariff wars. So again, do you expect any China +1 benefits at all for India? And beyond this, what are the other top themes that you'll continue to like here?
So working with Ridham and the team, we are overweight financials. That's actually a global trade at Morgan Stanley. We like financials pretty well everywhere other than in China. We also are overweight consumer discretionary in India and industrials. And we like the IT services names. They're very engaged and working hard on the AI rollout globally. And we're deep now into the shift from enablers to adoption. So adoption basically is AI being adopted by major software services firms, major global financial services firms. So the India players in that sector are very engaged in all of that. And we are underweight the defensives and certain other areas like energy and healthcare. And we're pretty happy with that approach. I think you were just mentioning before I came on your show that the banks index in India is basically almost back at the high already. And we're seeing that bank's outperformance in many markets.
Okay, all right. Thanks a lot to Jonathan for joining in and giving us your quick take on how you see the global markets shape up, particularly India. You're sounding rather optimistic on prospects, 93,000 on the sensex. So that's a good upside from these levels.
Thank you.
Well, let's focus on the paint industry now. Competitive activity in the sector has increased. Birla Opus has been expanding capacity as well. According to analysts, they say that competitive products from Birlas have found some resonance among dealers. How do the peers see this?
Nigel, I think
just
we've
a
got
second.
the
The man
RBI
of the day.
governor walking in. That's the RBI headquarters. And a lot of focus on this particular RBI policy, both for what the RBI will do. They will acknowledge the slowdown which we've seen, but what will they do about it? Forex swaps, OMO, CRR cut, and he's gone in. And of course, the other part, of course, is the extension. Whether the governor himself will get an extension, because we are due to hear about that. And we thought we'd probably hear over the last couple of days. It's not happened yet. And I think there will be questions on that as well. Just about 25 minutes to go for the policy.
For a man who has so much on his mind and so much riding on his shoulders, the whole Indian economy, he always manages a wonderful, graceful, benign smile, does he not? Always, even at ease.
He was the man. He was the man in Delhi during COVID. And if you remember those briefings, right? I mean, he was always sort of calm, composed through, and it was always a pleasure.
Well, and done a very, very good job. Sometimes you compare other central bankers across the globe and you feel proud the way the RBI has dealt with the situation. Well, we'll get to that in just a bit. But as I said earlier, let's get to Berger Paints. We have Abhijit Roy, the Managing Director and CEO at the company, who joins us on the show. Hi, Mr. Roy. Good morning, and thanks a lot for joining in. Well, how has demand been? I think earlier you were guiding for around a 7 to 8% volume growth for Q3. Is that on course? Is that a little bit better?
First of all, congratulations to you and their channel for reaching this 25-year mark. It's been a fantastic journey for CNBC. Q3, as I said, we had thought of that it will grow at about 7-8% by volume. As of now, it is slightly lower than that. Around 4 to 5% is where we are as of October and November. We are hoping that December will be better.
Got it. Okay. All right. So a little lower than what you were estimating earlier. Well, Mr. Roy, we thank you for your good wishes for the channel. And also, you've always colored up the screen for us. So we appreciate that. But let's talk about business. The competitor, Birla Opus, that's been making inroads. It's adding capacity. It's, got a fair bit of traction with the dealer community as well. And now they're, number 2 in terms of capacity. Do you think that they're a big challenger and, that number 2 position is under risk?
Well, first of all, that data is incorrect that they are number 2 in capacity. They are still actually around half our size in terms of 3-shift capacity that we have versus theirs. In fact, in the annual report of last year, if you see, we have 1.5 million tons of capacity per annum. Vis-a-vis that, they have declared about 83,000 or 84,000 metric ton capacity so far. So that itself is incorrect. But even if you take that aside, the fact is that capacity is not very important in the paint industry. We operate at around 60-65% of our capacity even today. And therefore there is enough capacity to produce. What is important is production and sales, and that is something which I think we are way ahead of them as of now, right? The second part is I think if you add too much of capacity at the initial stage, the return on capital will get hampered very badly, and we add capacity as and when the sales improve. So I think that is a better way of looking at things rather than looking at the capacity part. However, there is competition and that is increasing, and we are on our toes. It helps us to become more efficient, so we are okay with that.
So to take that point further forward, I mean, they might be at whatever capacity. Eventually, there's a scale-up happening, right? And there are large players in the market now, which brings me to the earlier projections that we got from you. You're saying November, it's been around 4-5% volumes. For the entire second half and for the full year, you told us that volume growth of 8% is perhaps possible in the second half. And there was a lot of talk of more value growth as well, price hikes. Now, is that still on the table? Can you tell us how prices have moved? And for the overall second half, what will both the volume and the value growth, what will the numbers look like?
Yeah, so, we stand by that. I think, we are expecting that the fourth quarter will be better than the third quarter as well. Third quarter is slightly better than the second quarter. So from that perspective, it is more or less in the same trajectory that we had predicted. We expect that 8 to 9% volume growth should come in the overall second half, and the value growth, because we had a price dip last year, that will go away in the fourth quarter completely. So the value growth will also look up in the second half. Comparative to first half, it will be the gap between volume and value will be lesser.
And what is the price hike? I mean, you're anticipating, just so that we have a sense, as you're saying, the base was lower last year. Just to understand the numbers, roughly what are we expecting on pricing?
So we took a price increase of 2.5% in the second quarter, and the price drop that had happened last year was about 5%. So this entire impact will come in the fourth quarter.
Mr. Roy, good morning. Prashant here. The other bit of news flow, right? The AkzoNobel sale. Is there anything you'd like to tell us regarding that?
So far, no material discussion has happened, so I can't really say anything, Yes, there are talks there going on, and in the press, they have said that they are looking and reviewing this portfolio. As and when things develop, if there is anything constructive, we will let you know, for sure.
Mr. Roy, as you said in the press, they've said they're looking. So obviously, privately, it would be at a much more advanced stage. So,
well, so far it hasn't moved to any significant stage or of any material importance. I would say in that way.
But you were in it as well. You're speaking with them.
We look at all. If the valuation makes sense, only then we are in it. Otherwise we will not be in it. So we take a look at all opportunities. If it makes sense, we will definitely look at it seriously. Otherwise, we will walk off.
So is there a process which is being followed, like some due diligence or?
No, nothing. No due diligence has happened so far. We haven't proceeded to that stage as yet.
But talks also haven't started, you're saying, or have the talks begun?
Talks in the sense that discussion always happens, right? As to whether we are interested, not interested, NDA has to be signed or not signed. All those things sometimes can take some time, legalese and other stuff. But as of now, there is nothing concrete or material which is of importance.
Mr. Roy, just to press you a little bit on that competitive intensity, I get that point. Capacity is not the matrix. Sales is the matrix. Now, the thing is that the Birla Group, they are selling white cement, they're selling putty. And now, in fact, if someone is doing that, they could very well be tempted to continue to use their paint as well. So that question is could they be a serious challenger? I think in terms of sales volumes, you could correct me, but I think you're number 2. So with them having adequate capacity, and as it is they're selling putty, as it is they're selling white cement, do you think that number 2 position could be at risk, or you think no, you're well equipped?
No, so there are 2 reasons. Of course, they are a challenger, no doubt on that. They have some advantage in the sense that what you mentioned about putty being sold or cement being sold. But that is typically, the cement part of it is basically for new projects, right? And new projects in paint trade is about 15% of the total sale. It is repainting, which is about 85% of the sale. So that has to be built up over a period of time in terms of distribution, in terms of painter connect, in terms of architect, interior decorator connect. Those things take time, and it doesn't happen overnight. And there are issues there. It takes a long, slow process. It is not something which will happen overnight. And that is why, and meanwhile, we also keep expanding. We have our own expansion plans. We have our own growth plans. I don't see, therefore, that happening in a hurry. It will take a long, long time if it ever happens.
Very solid point, sir, and completely take that point. You're saying that, the absolute fresh painting of new houses or new homes, that's only 15% of the trade. The rest is all repainting, and that's where brand recall, sort of association with a brand, the belief and credibility with the brand, that's really paramount. So take that point completely. Just to complete, sir, the point on pricing. You said last year there was a 5% price drop, 2.5% you did in Q2, so you've made up. Now you're expecting further price hikes in Q4. So will it be another 2.5%, which means basically you make up for the price drop? Or can you hike prices even further, given the competitive intensity in the market?
What I was trying to say is that we were at a disadvantage when we dropped the price last year by 5%. So when I am growing by 10% by volume, my value growth is showing only 5% because of the 5% drop which happened in the month of January and November and January of last year. So what is now going to happen is that disadvantage is going to go away. So that 5% disadvantage that we were living with right up to now is going to go away completely. And in that place, there will be a 2.5% added advantage because of the price increase that we have taken in second quarter. So the net impact will be about 2.5% in the fourth quarter or 2.3% in the fourth quarter plus. And in this quarter, it will be more or less flattish, which means we won't have a disadvantage of volume and value gap, which was existing earlier.
All right, Mr. Roy, we'll leave it there. Thank you very much for joining us. It's a pleasure having you with us here on our special day. Thank you indeed. Well, that's Berger with perspective on the cement industry, competition, price increases, and of course, what's happening is with regards to that AkzoNobel asset. I think we're going to take your early leave on Bazaar here because the policy coverage kicks off on the other side. We connect with a host of experts to discuss if the RBI will cut rates today or maintain status quo. Of course, 10 o'clock is when we'll hear from RBI Governor Shaktikanta Das. Stay tuned. That's all coming up on the other side of this break.